Welcome once again to our panel, Online Traders, You Are Your Own Fund Manager. Managing your own Forex fund can be an exciting yet challenging venture. It requires expertise in trading, strong risk management, and investment strategies to stay safe and profitable. In this session, we will explore risk management and investment strategies that fit you, debunking portfolio diversification myths, and essential risk management tools that traders need. Please give a warm welcome to our panel.
Hi everybody, it's great to be here today, and we have a really interesting subject. It's going to be how to be your own fund manager. As you know, within the world you see all the stats. Nearly 85% of all people lose money. And if you look at consistent traders making money all the time, it's probably between 90 and 93% of all traders fail to make money, and there's reasons for this. Now, the topic that we have today is being your own fund manager. I have a great team with me of panelists who have great expertise, and they're going to give you a lot of insights into how to change that percentage around and make you a successful trader. So I'm Paul Chalmers. I'm the CEO of UK Trading Academy in the UK, but we are internationally recognized accredited academy all over the world. I'll pass on to James, and James, please introduce yourself.
Hi, yes, I'm James Bentley. I run financial markets online. We're again a UK Trading Academy. We've recently launched a trading floor here in Dubai. We're on the hunt for talent to come and trade alongside us.
Good afternoon, everyone. I'm Ioan Mihalachi, the CEO of ProperFX, a company, derivative brokers that has been in the industry since 2018. We are all about making the traders see exactly what they need, have the strategies, and of course execute the trades within the markets.
Assalamu alaikum. Hi everyone. My name is Khalid Alabdulla. Been in the trading space less than compared to the expertise next to me for around 5 years plus. I work as an employee, but on the side I've been involved in the space of trading. It's an honor to be one of the speakers, and hopefully you're gonna get more valuable knowledge from us, inshallah.
Okay, thank you. Now, I've said at the beginning that so many of traders lose, and what we're trying to do here is to provide you with insights on how you can change that around to become a successful trader. And I suppose the subject that we have today is excellent. So what I want to do is ask James, first of all, what does it mean for online traders to act as their own fund managers?
I think when you get to the level of being a fund manager, you should already be competent in understanding how the financial markets work, how they operate, your own strategy. So being at the level that perhaps you're a fund manager, you may be past the beginning stage. So it's all about being competent. I always say to people, with trading, it's not one shoe fits all. So you have to find a strategy, a system that works around yourself, your employment, perhaps your risk appetite, your lifestyle, your family, your kids. And the aim is to get a system working for you as an individual and to get as consistent as consistent as possible, and of course build upon that really.
On my opinion, I think we have three major look into, which is the strategy, the analytics, and the execution of the trades. It's very important, all three to be combined together and to make sure that you have in-depth knowledge, that you are making your research correctly, that you are making your analysis, that you have the strategy, and that you are executing on the right platform in order for you to know exactly that you will have a right trade.
Khalid.
To add to your question, I would add even one more question. Is it possible to be your own fund manager? And the answer is definitely yes. Because I believe nowadays a lot of people would question themselves. Should I invest with someone more expert than myself in order to reach my small gains or long-term growth? And I think by having a decision, being your own fund manager involves doing your own research, analysis in the market, having a better understanding where to allocate your assets, to have a separate portfolio for each your goals, regardless if it's a short-term gains or long-term growth. In top of that, just having your risk management, because the expert who would have the funding or would have a fund management company or whatsoever would be more experienced than yourself. That means you are cutting short your goals reaching to wherever you want financially. But that does not stop you by even starting from $50 or $100. Are you willing or happy with gaining 1% in a week or in a month compared to your capital? Being realistic, that would definitely go back to my question. Is it possible to be your own fund manager? Definitely, yes.
Thank you. And when to become your own fund manager, there's a number of principles and a number of concepts that have to be put in place. And we've talked a little bit about risk management there. You know, when I'm up on stage and I asked the number of people who've blown their accounts, 85% of all the people put their hand up. Now, with the correct money management, that is almost impossible. And if we look at the risk tolerance, what I want to ask the panel next is how should an online trader define their risk tolerance?
I would always say for any new trader, you want to risk no more than 1% of your capital per trade. And I'd also say have perhaps no more than 3 trades open and live with risk out there. And perhaps no more than 2 of the same currency. So don't be trading Aussie yen, pound yen, and Swiss yen. If you miss some high impact news, yen related, or something happened, or something unexpected happened, you could be wiped out of 3 trades very quick. So if we manage it down to only 2 of the same currencies, no more than 3 live trades open at any 1 minute, and of course risking a maximum of 1% per trade, you're going to keep yourself safe. And for those of you that are brand new, that's probably a great way to start, and then you can develop your own risk tolerance and risk management.
I think we all know that on every single place, every single website is saying your risk CFDs, or depending on what are you trading, are very high risk. A risk tolerance is for every single fund manager, from my perspective, is a tool that he has to have with him all the time, is a part of his life in everything he does, not only on the trading aspect, not only on the investments. It's very important for the actual fund manager to understand, to make his research, to be, again, as I said before, analytical, strategical, to use, as the panel before, they said, to use AI, because it's at disposition of everyone to use in our days, and to make the correct decision when trading, to actually place the right trade, and of course to diversify their portfolio in order for the risk to be minimized.
The way that I see it is because I'm more of a psychological type of traders, and I believe having a tolerance with the risk, it involves a lot of newbies getting caught with the social media vibes, believing that everything could happen overnight. That's actually what get caught in your mind by understanding, shall I risk more, as my colleague have mentioned, not risking 1% per trade. Unfortunately, the newbies cannot tolerate with this because they see small gains by risking 1%. And from there, they took it further by, let me try 2%, let me try 3%, and it carries on. And funny story, the other day I had a discussion with one of my good students. They are willing to move their stop loss lower, willing that it could reverse back, but not having a proper take profit, which is crazy. Are you willing to risk more, but not willing to have a small gains? Which is insane. When you reach to that point, it's sometimes, I don't know, is it the social media? Is it the person where you got your education from, who did not got you the right way of understanding how to manage your risk? And I believe, as my colleagues, for example, as I'm James, being a director in FABO, this is one of the parts that they do offer by understanding how to manage your risk and leaving the emotion aside, because market does not know that you have a debt. Market does not know that you have a due, it's salad, orange, bills to pay, does not know you have a monthly rental to cover, which literally you just leave your emotion, you leave your stress, you're just willing to put the money that you're willing to lose. Those small details matters in order for you to tolerate with the risk.
I think that as we go and develop our discussion, as we go through the panel here, you will see the trading plans, the education, and also money management coupled with risk tolerance are some of the major items that people don't understand properly, and that is why so many people lose. Now, we also have to have tools. If we take the trading plan later on, we have to have tools. So, James, what tools and resources are essential for online traders?
First of all, a mentor who can show you a proven track record, someone that's been there, done that, got the t-shirt, who's traded for years and years and years. If you talk about the last 10 years, you've had wars, you've had parliamentary votes, new presidents, you've had all sorts going on. If you've survived the rough seas of the last 5 to 10 years, you're pretty seasoned and you'll be able to manage any sort of expectations ahead, understanding volatility. So I think the key there is working alongside someone who's been there, done that, got the t-shirt is rule number one. Other than that, me personally, I don't rely on too many tools or indicators. We trade price action, so if you can read a chart, you can understand any asset class. So when we get asked, what assets do you trade? The answer to that is whatever asset shows the strategy. And that way you have the ability to adapt from market to market. So for someone that's brand new, I would say get yourself a mentor who you can rely on, who can trust, who can prove to you that they can do it live perhaps, and then look for your own preferences along the way.
In terms of the tools that everyone should have as a fund manager, I think we are going back to the basics. It doesn't matter at what stage are you as a fund manager in this industry, because the macroeconomic things are changing from a day to another. Different things are impacting different ways. So, in my opinion, having the right tools like a trading academy or the broker that you are trading with must have the right technology, must have the right risk management tools to offer to their fund managers, to offer to the traders, in order for them to make the right decisions. If that is not available, that means you should also look outside and make a research, as I said previously, with strategical, analytical, and also with ChatGPT, which is available for everyone. Not only that, as a risk management tool, you should always make sure that the platform that you're using has take profits, stop loss, and helps you as much as it can in order for you to understand the risks involved and that you can make the right decisions to use those specific tools in your trading.
So just adding on what have been mentioned, I believe such as tools, knowing the right brokerage platforms, understanding each brokers what they offer. Somehow I believe 80 or 85% of traders losing their money for not having understanding. It could be from brokers charging higher spread or commissions. Some brokerage offering high leverage where you don't know how to actually manage your positions, where you go on and on and on as long as the leverage is high. Another tools as well is charting tool, which is TradingView. So differentiating, regardless you are trading on TradeLocker, CTrader, MetaQuotes, you need to understand that those are platforms to execute your actual trades, but separating that one, they are limited when it comes to the analysis, and just to have a trading view on a side or any other platforms that you are comfortable with. by analyzing and understanding your plan, where do you see the pair is going, or whatsoever you draw your trend lines, whatsoever strategy that you're having. Other thing I would recommend is the news feeds, that at least if you are trading forex, commodities, whatsoever, at least have a news feeds such as Yahoo Finance, investing.com, Baby Pips, you name them, to just at least have a look, spend 5 minutes reading. Those are the tools where it can be some sort of confluence for your confirmation and your decision taking whatever trade that you're going to take. Nowadays also a lot of traders mentioning journal your trades to understand what went wrong, what went right. Each one of us has their own way of journaling whatever they do. Some of them writing down on the notes, some of us writing them on the phone. And there are platforms nowadays offers you to do all that, except maybe your emotion, where you have to put it in manually to understand why I took that one and I did hit my take profit or stop loss. So those are maybe basics that you need as an tools to have them being or considering to be a professional and profitable trader.
I think what's come out a number of times, I'm sure you've heard the same thing about trading plan, and that's where emotions come in and psychology. Because a lot of trading trading is done on emotion, which it shouldn't be. And that leads me nicely into what each of the panel guests have said about a trading plan. So how can traders build and stick to a trading plan?
I think the first thing to do is, once you have your strategy and you have your probability, so let's say you're winning 7 trades out of 10, which means you immediately have to put your hands up to say, I'm happy to lose 3 trades out of 10. When you get to that position that you're working on pure probabilities, you're kind of installed discipline into yourself, and you'll know if you take one step out of line, that probability of that success rate is going to go. So I think it's experience over time of building your strategy, getting consistent, and then when you're a disciplined trader, you'll be able to punish yourself, in fact, the amount of loss perhaps, where it's more than 1%, or the capital-wise of you stepping out of line. So the key is obviously sticking to your probability, or playing a game of probabilities of winning 7 or 8 trades out of 10, sticking to your strategy, and I think discipline will increase over time.
On my opinion, I think you have to have clear goals. What do you have in the account? What do you want to do? What do you want to trade? How much risk? How to diversify? And to be your own entrepreneur, because if you treat the trading as an entrepreneurship without emotions, you will understand actually what you are doing, what trades are you taking, what are you diversifying, how much risk are you taking. And it's very important on the same level to make sure that you put a stop loss as before, as we said, but also you stop. It's very important for you to make the right decision, that if you lost today, close the computer, tomorrow is another day, and until tomorrow, make yourself a strategy, get all the information as much as you can in order to make the right decision tomorrow.
Having a plan, I believe it's a very interesting topic to cover, because understanding, as I mentioned, are you more of an investor, or are you going for more of like daily gains? Are you more of like, just defining your personality reflects back in trading. So trading is same as any business. It's just a social media vibe have made it this way, but trading is basically same as any plan. If you are planning to open a coffee shop, definitely you will have a business plan. So do you have a business plan for your trading journey? Do you have a short-term plan? Do you have a daily plan? Do you have a weekly plan? Do you have a monthly plan, yearly plan? Those things actually puts in position of having a solid plan, understanding, are you more of like a stock trader? Are you more of like a commodities trader? Are you holding for too long? So having a strategic plan, sticking to that plan, it would be easier for you to understand first your personality, secondly where you are heading. And along way, definitely, there's an obstacle comes. Again, such as any business. Are you opening a coffee shop today? Everyone is coming to have a coffee, but tomorrow, next to your door, there's another coffee shop who is offering something more trendy. They would go to them. Are you aware of that? So are you still sticking to your plan? Are you still selling the same coffee that you're believing in? So having a plan, sticking to the plan, knowing, are you a scalper? Are you a day trader? Are you a swing trader? Shall I follow one trade, one session, one pair? Should I have a portfolio of stocks? Am I more leading into index pairs? So those small decisions would have your plan solid, understanding where you're going, without even distracting your mind and your emotion to find the light at the end of the tunnel.
Thank you, Khalid. I think I like that idea of calling it a business plan, actually, because it does. It sets out everything that you're going to be doing in trading, from how big your stop loss is. As James just said, it's not an certain asset class. He's sticking to his trading plan. If something sets up as a strategy, that is what he's going to go in on. And everybody needs to have a very, very detailed trading plan, because that will help take out emotion and the psychology issues that you get from trades when trades are winning and even when trades are losing. Going further than that, what I'd like to ask each of the panel guests now is, can you just summarize what common mistakes should self-managed traders avoid?
Obviously, the biggest one, risk management, as we've been speaking about, emotions, as a few of the guys have said, and it's perhaps taking influence from outsiders. New traders will always have parents or friends, families, colleagues that will always put a downer on trading and say it's it's risky, you're going to lose your money, it's not good. I think you have to just ignore that, and if you're really passionate about trading and you see the potential that trading can bring, then you've got to ignore everybody outside and stick to what you're learning. You work alongside your mentor who's going to guide you from A to Z. So I would say that's the biggest one.
The first thing, I think it's the fear and greed. You are always greedy, but you always have the fear to close that position. And you always have the greed or the fear to move the stop loss and put a take profit. So I think that a wise thing to do is, again, to inform yourself on the specific trade, on the market that you're trading, and of course don't avoid using the stop loss and take profit, and of course a transparent platform which will give you the exact pricing that that you're trading and that you're looking into that. Unfortunately, nowadays there are a lot of people which are not informed about the regulations, about with who they trade, about how they deposit their money, about if their funds are if their funds are kept in tier 1 banks or not, or at least safe, or if they can withdraw. So very important for them is to get and to be informed in everything they do, and to stick to the business plan as our colleague said here, as panelists, and to make sure that they make the right decisions. But very important is to be informed, to get the information, because it's out there for you to see and to act on it.
I'll make it very short and simple. Overtrading, not taking a risk, taking high risk on the position, greed, fear, emotion trading, chasing wins, trying to convince yourself, fighting with your own mind is a very simple thing. Those things is just avoid them. And I'm not saying something out of the book. It's been in the YouTube. Every trader you meet, ask them, and they would keep repeating the same thing. Don't over leverage. Don't over trade. Leave the market if your mood is not good. I mean, if you're fighting with your wife, your husband, girlfriend, but leave it. Those things hits your mind. Again, I'm speaking from from perspective of a psychology trader. Those things as in human nature, unfortunately, we get caught to, and sometimes it's too hard to control. By defining your personality, you just could avoid all of this easily. Today news is coming. Just me scrolling down, I'm sure some of you are opening trades. Some of you might regret it, some of you might be happy, I don't know. But you know, those things where you are like, I get caught. I'll share a very short story. I used to drive back home trading. I used to stop on the yellow line. I laugh at myself now when I look back. Why did I do that? Fear and greed. Just I want to go home to inform my wife I have made this much. What is it for? Nothing, you know? So small things, just avoiding them by understanding. If I'm in, I'm all in. With mind, with peace. I don't know, each one of us have to do yoga, have to go punch someone to feel better. I mean, whatever makes you better, be in a peace of mind, take the lead, and take your own decision.
Thank you, Khalid. Just looking at the next question, it's a little bit loaded actually because it's about education, and you have a CEO of an academy here, you have one of the main directors of an academy. Most probably those two academies, two of the best in the world. But I'm still going to ask that question. James, how important is continuous learning to online traders? And I'll be really interested about what Ioan and Khalid say about this, because obviously we're immersed in it every single day.
You have to. I think the biggest thing, as I mentioned briefly earlier, is the ability to adapt to different market conditions, adapt to different market sentiment, and most importantly, understanding what markets perform better at different periods of the year. A lot of people miss out on understanding seasonality. So at certain periods of the year, there's markets like soybean, coffee, cocoa, assets that you wouldn't typically trade, hugely outperform FX. So having the ability to adapt to market sentiment, learning about seasonal patterns and what markets perform better over different periods of time, it is huge, really.
Continuously learning in trading is a virtue, because it gets you to a point where you can grow and you can make right decisions in the aspects of the assets that you are trading or within your goal in life. It's very important, like I said, like I had a discussion at the beginning with one of the panelists. I think we are going back to basics. I think it's like if you don't have an academy, if you don't learn near you, if you don't learn the right things that you want to do within your fund management, that means you shouldn't even consider this. As I was saying to one of the panelists, I consider that a broker without a trading academy near it is like a person without a mentor. So if you have a mentor near you, he will push you to the right direction. He will give you the right tools to make informative decisions. So continuously learning in this disruptive market, in these disruptive days that we are living, is very, very important, of course, within the sector that you are.
So when it comes to the learning, I don't think so it's something we should not pay attention to. We will always be a student of the game, regardless of the level where we are. Proudly, I can say I've been a student from FMO with James in financial market, and I have developed myself to reach to the stage where now I'm able and capable to actually teach another students. And I'm always going to also look after whatever educations which going to add so much valuable knowledge or whatsoever as an insights or updates in the market, because the market's always changing. So we need to be able also to adapt to the changes. When it's crashing, what do I need to do? I'm not gonna get this easily. So definitely having some sort of mentors, some sort of sources or institutions or YouTube is very, very, very important throughout the journey of a trader.
Thank you very much. I don't know if our host will allow us one question. We're nearly at the end. Are there any questions from the audience, please? We'll just take one because we're nearly out of time. Any questions from the audience? Yes, can somebody give a mic, please?
Hi. First of all, thanks for this amazing advice and this informed presentation. I have a question open to all four of you. What should your checklist include for being convinced to take a concentrated bet or a trade?
So what should your checklist include to take a trade?
To be convinced for taking a concentrated bet.
That's very personal, so you need to develop your own strategy. So work with a mentor who can show you the core foundations, understand price action, when to get in, when to get out, have a checklist that your mentors worked with you and they trade and you believe in it, you see the success rate. Then you need to develop your own way and means around that. So whatever your strengths are, your strengths might be you're an aggressive trader, you're not scared to click the button, so you'll be able to drop time frames, get in more frequent trade. Or if your strength is picking out horizontal levels, then you bring that into your strategy. So the first stage is get a mentor and learn a strategy that works. Then over time, develop your own way and means around that strategy that suits you, your lifestyle, your work commitments, your family, your kids, whatever it may be.
Right, thank you.
Ioan? Would you like to also answer? Ioan?
Sorry, I could not hear you. Can you repeat your question again? Sorry.
Sure.
The checklist of?
What should your checklist include to be convinced for taking a concentrated bet or a trade?
I think I've maybe, if I'm not mistaken, I have mentioned, is just having your peace of mind, understanding which situation are you sitting on. Is the money which is in my capital allowing me, or I'm willing to lose what I'm trading, which date, is there any news, which strategy that I'm following, does this goes alongside with the pair that I'm trading, or just because someone have told me and I'm just gonna copy paste without having understanding and knowledge of what I'm doing. Most likely, for example, on a quick note, following signals, people does not understand why they are taking it, just hoping, take profit, that's it. So basically that's why maybe as an taking the signal into consideration could be pros and cons, where if you define that one to understand, to put it in your checklist, you would not need that signal anymore. But if you keep following the signals without understanding what you do, you will not include that in your own checklist, and you will be always a follower. Follower for who? That's a different conversation. So having a checklist, definitely it's a very important, by knowing your strategy, your session, your mental health. Are you in a good health of sitting in front of the screens? Can you take when it comes to the minus, are you patient? Are you more aggressive? Are you more of like, again, patient and all that? So there's a few things to put it on the checklist. Unfortunately, again, falls also into plan. Are you sticking to your plan? That's literally your checklist. Who I got this information from? Is it legit? Is it real? Is it just from such as any social media platform? So this is very crucial that to have those things in order, and whenever you take your decisions, you take full accountability of your decisions without having an excuse to blame someone else, because you are the one who have decided to include that in your checklist. And if you don't like it, remove it from your checklist, add something else, or stick to whatever is in your checklist. I hope that answered your question.
Definitely. Beyond the analysis standpoint, what I understood is how much money are you willing to lose in this particular trade? Because it's concentrated, right?
And unfortunately, we're going to have, if you could ask off stage, we're quite happy to answer any questions you have off stage, because we have to be, we have to understand there's other speakers after us, and it's only fair that we use only our allocated time. So I appreciate all of you for staying. Thank you. More came as we came, and I hope that we've given you some insights into, how you can correctly trade. And as James has said, the most important thing is getting a mentor. Thank you very much, everyone.
Please, a warm welcome, a warm round of applause for us.